Across now to our personal finance expert of the day, Vineet Arora of ICICI Securities joins us. Vineet, before I get questions for you from our viewers, a quick question. We are suddenly again seeing this rush of NFOs coming in from mutual funds, several of them being equity funds as well. What's the sense you are getting from investors, from retail investors? Do you see a desire on their part to come in and participate in the markets at this point?
See, we are seeing a spurt of NFOs like you rightly said, but they're not showing the desire that we have seen earlier. Primarily, I think it's because the market has been very volatile and there have been a lot of ups and downs. So the retail investor is still a little concerned about which direction this market is going to take. And I think that's really holding them back. Otherwise, the response is there. It's much better than what it used to be maybe about 9 months back. But it's not as good as what it can be. So I would say there's still some way to go.
So are you saying it's to do with more to do with the sentiment of the market than with the interest of distributors to push this?
I think it's more to do with the interest of the consumers who want to really invest in the market. And as far as the distributors are concerned, if there is a pull from the market, I'm sure the distributors will provide the product to the customers.
All right, Vineet, let's get Shubha Krishnan in from Delhi. Shubha?
Yeah, I have a question.
Yes.
I had invested rupees 50,000 in JM Basic Funds. That was in 2007. They were giving me reasonable returns till 6 months back. Now for the last 6 months, they're giving me negative returns. So my question is, should I stay invested or should I exit?
All right, but you've been in this fund, you said, for about 2 years.
I invested in 2007. That's roughly 3 years.
That's about 3 years. Okay. And when you invested, you were looking at a long-term perspective.
Yeah.
All right. Vineet, while on a 5-year perspective, the fund remains one of the highly ranked funds, but, any sensible investor should keep periodically looking at the mutual fund investment, not maybe daily, certainly not, but at least once in 6 months. She's a bit concerned about the negative returns of the last 6 months. Should she be worried about this scheme?
See, the JM Basic Fund is a fund which is focused on the petroleum and the energy sector. The way the fund has performed has been quite inconsistent. They have done reasonably okay in the first couple of years, and then it has not done so well over the last couple of months. It, I think, did participate a little bit in the rally which happened recently. So my view is also, if you look at the portfolio of the entire fund, it's a lot of holding is towards the mid and the small cap between this sector. So my view is that if you are really looking at a consistent return, then maybe you should exit from this fund because this fund is expected to remain volatile.
All right. Shubha, you got the call?
Yeah.
All
Thank
right.
you so
Take a
much.
decision on the basis of what you heard and, of course, take advice from your financial planner as well. Thanks very much.
Thank you so much.
We take a break, but lots more of queries coming up. And, of course,
we've been talking about your personal finance queries. We have another caller who joins in. Nishad Bahulekar calls in from Mumbai. Hi, what would your query be today?
Yeah, good morning. I would like to know your take on Tata Infrastructure Fund. So is this a good time to invest in it?
How much would you look to invest into this fund?
Around 10,000 rupees.
Okay, Vineet, come in on this because, infrastructure is really the theme that many are looking at this point in time, considering the government's push into the infrastructure sector per se. But for this fund, I understand that 191% is the kind of returns that it gives in the 5-year time frame. What would your view be on this particular fund and for someone with a corpus of 10,000 rupees?
See, Tata Infrastructure Fund is, I would say it's a good fund, but it's been performing below the peer group, and it's been performing marginally below the peer group in the infrastructure sector together. But like you rightly said, infrastructure sector is the upcoming sector right now, and it's the right sector to focus on if you want to invest the money today. And there are all the reasons for that. There's government spending which is happening on infrastructure sector. There is a lot of public-private partnership which seems to be taking off. So the demand is going to be there, and I think the sector is a strong sector. Now that you're looking at investing money, I would say along with Tata, maybe you can evaluate some other schemes as well. Some good schemes which have been giving good returns in the past is Canara Robeco Infrastructure. You can look at that. You can look at a Reliance Diversified Power, even though it's a little more power-centric kind of a fund. Or else you can look at, if you're conservative, you want a more consistent performance, maybe you can look at ICICI Prudential Infrastructure Fund.
Right, but what you're saying, Vineet, is that while it's not perhaps done the best in its peer group, but there's not much of a difference. So in that case, if he's willing to wait it a while, is it okay if he stays on, or does he have to necessarily get out of it?
Absolutely, Vivek. I think if he already has, I thought he's buying it right now. So if he already has, I would have suggested that he can hold on to it for another 6 to 8 months and see the way this fund would perform. But he's getting into a buy stage, so he can evaluate some more schemes before he enters into the buy.
Nishad?
Right.
Are you okay with that?
Yeah, I got that.
All right. So I suggest, as Vineet told you, look at a few other schemes as well if you haven't already bought. And perhaps you also may want to take a longer view of 4 or 5 years when you take up an infrastructure fund. All right?
All right. Yeah,
all right.
Sure.
Good luck.
Okay. Yeah, thank you so much.
Bye.
Yeah, bye-bye.
Let's go across to Mitul now. Mitul Gandhi, who is also from Mumbai. Mitul.
Yeah, good morning. I would like to know whether investing in DSP BlackRock Focus 25 fund is a good fund to be invested, or are there any other existing funds that are ideal than that?
Do you have any other investments, Mitul, in mutual funds?
I have invested in IDFC Enterprise Equity Fund.
That's the only one you've invested in?
Yeah, and previously I had invested in Reliance Natural Resources and Reliance Infrastructure Fund, but I have redeemed it post the Supreme Court ruling and all.
That would have been the share, right? Not the fund, not the mutual.
No, Reliance Natural Resources Fund and Reliance Infrastructure Fund, both.
Okay, all right. Let's get Vineet in here. Vineet, he's only got one mutual fund investment. He's not a very, from the sense I get, he's not been very active as far as his investments through mutual funds are concerned. I am suspecting that he's looking at the DSP BlackRock Focus 25 fund, also again like many people do, NFO, cheaper, should I get into that? For an investor like him, who doesn't have too many schemes in any case, would you much rather that he goes into an existing scheme, or should he consider an NFO at this point of time?
Right, Vivek. I think at his level where he just got 2 schemes that he holds, it's better that he goes into a scheme which has got a reputed past performance instead of going into an NFO. However, DSP as a fund house and Apurva Shah, who's going to manage this fund, has got a good track record as well. So I would just say that, just talk about DSP Focus 25. My view is that it will turn out to be a good scheme, but it's a very focused and a concentrated scheme, and hence the investor needs to be aware that it's going to be more volatile. So if you're an aggressive investor, maybe you can put a part of your asset allocation into this particular scheme. However, if you're conservative, then there are other schemes from the same fund house, like a DSP Top 100 or a DSP Equity Growth. Maybe, that's a better scheme for this, for the profile that you have just explained to me, Vivek. I think this is a better profile to go in for a DSP Top 100 maybe.
Vineet, one of the things that SEBI is now insisting on with AMCs is the fact that you have to show why you are different when you come out with an NFO. And if you have a scheme which is similar or by and large similar to, the one you already have, which you're launching, that's not something the regulator wants funds to do. Are you, in all these NFOs which are coming today, are you seeing a distinct sense of difference or differentiation between what they already have?
See, the DSP clearly has a distinction because DSP in its entire portfolio does not really have a focused fund series. So DSP till now had an equity growth and had a top 100, so which were reasonably diversified funds. So they don't have a focused fund in their stable, I would say. So for them it is a different scheme from the DSP stable, and it's not really a copy. Even though there are focus schemes available in the market, so DSP that way is right to get it from on its stable.
All right, Vineet Arora, we'll leave it there. Thanks very much for joining us. We've run out of time.